Welcome everyone, happy Thursday. Thank you for joining today's webinar on passively investing in an apartments in your self-directed IRA. It is top of the hour and I do want to be respectful of your time. So let's get started. I'm excited to welcome our featured speaker, Rayna Mike. She's the CEO of Love Apartments located in Tennessee. She'll give us the fundamentals of apartment investing and some of the information that she shares with her IRA clients who've invested in multifamily units with her. Thank you, Rayna, again for being our featured speaker today.
Thank you for having me.
You're certainly welcome. Before I turn it over, I do want to give you a general overview of self-directed IRAs and how they work. If you have questions, you're always welcome to put those in the question box. We'll answer as we go, and we'll certainly allocate time at the very end as well to answer any remaining questions. I'm Reneika Lightbourne. I'm the business development specialist here at Advanta since 2019. I'm also an Advanta IRA client prior to joining staff. So self-direction is something that I advocate both personally and professionally. After today's call, webinar, if you have questions or want to talk through your scenario, you're always welcome to give me a call or send me an email. Certainly go to advantaira.com. It's a wealth of knowledge. You can schedule a consultation with myself or one of my colleagues. Just a little housekeeping before we get started. At Advanta, just know that we don't give any tax, legal, or investment advice. All of the information that's going to be presented today is just for educational purposes. As always, we encourage you, do your due diligence. You want to consult with your professional teams, talking to your advisors and your CPAs and so forth. Quick takeaways, if this is a new concept for you, I know it can be a lot of information all at once, but just know that any IRA or former employer plan qualifies to be self-directed. 2, you choose to decide what is it that you want to invest in. Today, we're focusing specifically on real estate related assets. And then of course, knowing that all of the income generated from that investment flows back into your IRA. A little history about Advanta and who we are. We've been in business for 22 plus years now as one of the leading self-directed IRA administrator in the business. Our headquarters is located in Clearwater, Florida, which is the Tampa Bay area. Advanta, we have an office in Atlanta, which is where I'm based, but we do work with clients nationwide. We have well over $3 billion under administration. While we don't give our clients any tax, legal, or investment advice, our team is comprised of attorneys and certified IRA service professionals. One of our core focus is providing you, our clients, that concierge style service where you have a dedicated account manager who's with you for the life of the account with us. Also, we have practitioners and experts like Rayna who come in and knowledge share with you. In addition to having weekly webinars, you're certainly welcome to check out our podcast, which is hosted by my colleague, Alex Perney. In addition to doing weekly webinars, we also have a virtual networking event called Pitch, Promote, Prosper. The next one is on Friday the 28th. We typically have those once a month. I also encourage you to check out our blog. Anything and everything related to self-direction, Advanta IRA, we have you covered. So exactly what is a self-directed IRA? Just very simply, it means that you as the account owner, you have complete control over the investment decisions, you have complete control over your retirement funds, you get to really diversify outside of the traditional stock, bonds, mutual funds. You can use those IRA funds to invest in private equity, certainly hedge with precious metals, you can invest in notes and mortgages. Again, we're focusing specifically on real estate. I know with real estate, it means many things to many different investors. So in addition to investing in apartment complex, multifamily homes, you can use IRA funds to invest in fix and flip projects, short-term rentals. You can do single family home, you can do rehab projects, you can invest in tax liens or tax deeds. It's near limitless in terms of the opportunities when it comes to using IRA funds. A question that typically comes up is, why do people choose to self-direct? You can self-direct for many different reasons. I'll just touch on 3 of them. 1, it can be a new source of capital for you. So if you have funds sitting idle in an old employer plan like a 401k or a TSP, or you have an existing IRA, you can elect to move as much or as little as you want to make your next investment. If you are looking to raise capital to do multiple deals, this is a great resource for you to tap into. Another reason as to why people may self-direct is because of the ups and downs in the stock market. We know specifically with real estate is a tangible asset. People are always going to need a place to live. Real estate appreciates, it always retains value. And then, of course, the tax benefits, having rents, profits, dividends flow back into your retirement account, tax-free or tax-deferred, depending on the type of IRA or type of retirement account that you have. If you were to go to the IRS website, you won't see the term self-directed. Again, that just simply means that you decide what is it that you want to invest in. But as for the account types, it's the ones that you're already familiar with, like traditional IRAs for individuals. You elect to fund a tax-deferred account. You get the tax break up front. You grow your account over time. You pay taxes once you reach retirement age, 59 and a half, or during R&D years. With a Roth IRA, you're electing to pay the taxes up front. As long as you've held that Roth IRA for at least 5 years and you're 59 and a half, those distributions would be tax-free. For small business owners, entrepreneurs, 1099 contractors, you can certainly also save for retirement by using solo 401ks, SEP simples. Specifically with solo 401ks, I know a lot of real estate investors, a lot of real estate professionals prefer that account type just because you have greater flexibility. If you want to know more about it, again, you're welcome to reach out to myself or one of my colleagues. Some smaller dollar account that is just as important to be able to save and or self-direct or educational savings accounts. So if you have kids, grandkids, nieces and nephews, you can pay for their educational accounts using ESA accounts. And of course, with a health savings account, as long as you have a high deductible plan, you would be eligible to open up an HSA and self-direct. The main thing is, well, one thing to consider is if you have a current employer plan and you're not yet 59 and a half, then most times they'll tell you, no, you can't move those funds. Don't be alarmed by that. That's industry standard IRS rules. You can certainly inquire to see if they'll make an exception for you to move a portion. But if it's an old employer plan, 401k, 403b, 457 TSP, you can certainly move those funds. If it's an existing IRA, you can move those funds as well to be able to self-direct. In terms of funding your accounts, you have several options. One, you can transfer from an existing IRA. That's a tax-free movement of money. In that scenario, let's just say you have an IRA at Fidelity or Charles Schwab. You would fill out the Advanta IRA paperwork. Advanta, as the custodian, would submit that over to Fidelity or Charles Schwab on your behalf. The only thing that you need to make sure is whatever amount that you want to move, make sure it's in a cash position. So if it's currently tied up in stocks or bonds, you would have to tell that custodian to liquidate into cash, and they'll get those funds moved over. There's no tax reporting with IRA, so you can, again, transfer as much or as little as you want to, as many times as you want to. When it comes to old employer plans, like an old 401k or TSP, those are reported, but there's no taxes, no tax liabilities. So for example, if you're moving out $100,000 from your old employer plan, the other custodian will report to the IRS that $100,000 left your account. Advance as the receiving custodian will report to the IRS that $100,000 was received, so it neutralizes. Again, there's no tax liabilities. In that scenario, though, with a former employer plan, you have to initiate that request, meaning you have to tell the other custodian you want to move X amount of dollars over to another qualified retirement account. You're not taking a personal distribution, you're just simply moving it from one retirement account to the next. And of course, if you're eligible, if you have earned income, you can make an annual cash contribution. For traditional and Roth IRAs, you can contribute $7,000. If you're age 50 or older, you can contribute $8,000 into an IRA. For SEP simple solo 401ks, again, those are the higher contribution accounts. Specifically, solo 401ks, essentially you get to contribute as an employee and it matches an employer. So you can, depending on your age, you can put in $70,000 or possibly up to $81,000 if you're between the ages of 60 and 63. The Secure Act 2.0 just started that provision to allow you additional catch-ups if you're within that age bracket. For ESA accounts, again, smaller dollar accounts, you can put in $2,000 per year per child. For HSA, having a high deductible plan, if it's an individual plan, you can put in $4,300. If it's a family plan, you can put in $8,550. But also, if you're 55 or older with an HSA, you have the ability to put in an additional $1,000. You can have multiple self-directed accounts, like if you have a traditional IRA, an HSA, an ESA, you can elect to partner those accounts together to do your deals. In terms of getting started with us, the process is pretty straightforward. We've streamlined that for you in 3 simple steps. Step 1, filling out our application. You can do that directly on our website. You have guidance. If you need help, we can walk you through that. For funding, again, you can use a combination of making an annual cash contribution, transferring from an existing IRA, or doing a rollover from an old employer plan. And then finally, step 3, making your investment. Is it real estate related? Is it something that you'll hear on the call today with Rayna? Or if you're looking to, again, invest in a private company or precious metals, essentially you have the ability to use your IRA funds to diversify. And with that, Rayna, let me pull up your presentation. Just bear with me one moment. Okay, you can go ahead, Rayna.
Good afternoon, everyone. I am very pleased to be here with Advanta IRA. We are really excited about getting to know everyone here on this webinar. This is our leadership team, myself, my daughter, Sophia Mike, and Teresia Cornati. I am the CEO and founder with 25 years of experience in real estate and mortgage banking. I bring extensive leadership experience from national management roles and European real estate ventures. Since founding Love Apartments in 2017, I have over 20 million in real estate acquisitions and established a renewable energy business in Europe. I have an MBA and JD from UCLA. I was summa cum laude, and I'm a sought after keynote speaker on nationwide commercial real estate conferences. Sophia Mike, as a property manager and operations, she has 10 plus years of experience in customer service, property management, and real estate marketing for Love Apartments, both in Los Angeles and in Tennessee. We are originally, my daughter is born and raised in Los Angeles. I am originally from Los Angeles, born in Europe, but lived all my life pretty much in Los Angeles until we came to Tennessee, because we started acquiring assets in the Southeast, and we found the Southeast market being very favorable to landlords, is a full opposite to a California market. Even though we were landlords in Southern California and Northern California, we saw the landlord laws are extremely unfavorable, and we started transitioning portfolios in the Southeast. Sophia currently manages a 56 units apartment complex in Memphis, Tennessee, focusing on improving customer satisfaction and operational efficiency. She's fluent in 3 languages, English, Bulgarian, and Spanish. Sophia completed her studies in criminal justice at San Francisco State University, with additional real estate courses. She has a bachelor's degree in criminal law and justice. Teresa Cornati, very valuable member of the team. She's our investment analyst with over 20 years of experience in architecture and construction project management. She started real estate in 2015 with Golden Section Properties, where she manages a portfolio of 110 units across multiple properties. She specializes in underwriting and asset management with a focus of identifying emerging markets and value-add investments. Her education is a bachelor from USC, and also she has architecture and MS structural engineering from US Berkeley. My leadership profile is I'm a real estate pioneer. I see opportunities. I'm a visionary. I see opportunities where maybe others don't, and capitalize on those opportunities. I'm a 3rd generation investor. My grandfather, my father, myself, and now my daughter is a 4th generation. So we believe in creating generational wealth for ourselves and for our investors. I also I have diverse experience across mortgage banking, brokerage, and international markets since 1989. Expanded from loan origination to national management roles within 8 years. I'm an international developer. I established European real estate ventures in UK and Bulgaria, where I was born. I co-founded Bel Air Green, which is developing renewable energy projects across Central and Eastern Europe. I learned renewable energy, solar from the best in Europe, from Germany and Spain, which are number 1 and 2 worldwide in renewable energy. I spent a lot of time in Germany, a lot of time in Spain as well. Growth accelerator, I rapidly built Love Apartments portfolio of over 500 units, 20 million valuation since 2017, currently expanding with 750 multi-family units across emerging markets nationwide. Our main focus is the Southeast. We have a project in the Northeast currently, but we're mainly in the Southeast markets of the United States. Um, I use my legal expertise with business acumen to identify below market acquisition opportunities for investors. Our track record is 500 units and growing. Since 2017, we had total assets of $20 million and expanding rapidly. Our portfolio has grown substantially since our founding in 2017, demonstrating our ability to identify promising investment opportunities and generate strong returns for our investors. Each acquisition undergoes rigorous analysis to ensure it aligns with our value add strategy, which is extremely important to us because we value our experience. We apply our experience. We don't acquire properties using any emotions. We simply look at numbers, markets, and how we can capitalize for the highest possible returns, and working smart versus working just hard. Our diverse property types allow us to capitalize on various market opportunities while maintaining our core focus on multifamily units. We've done office buildings, we've bought, but our core business is multifamily.
Rayna, a question. Oh,
Yes.
sorry. A
Yes.
question came in asking if you can kind of elaborate on some of the key factors that you consider when selecting a location for your multifamily units.
Oh, absolutely. The key factors we consider is that an emerging market? Is that a truly emerging market? Is that an undervalued market? Has the market reached this bubble level where it's single family? We look at single family homes. We do not invest in single family homes currently, but we look at that as one of the factors. What was the median single family value 5 years ago? What is it today? What do you expect to be in the next 5 to 10 years? So we look at many factors. We look at the government and politics is very important for business. We can't keep it separated, unfortunately. And we look at that. Is the government climate conducive to landlord? Are they conducive mainly? Are they mainly for tenants, and they treat landlords like they are second-class citizens? What are the laws of eviction? We look at so many different criteria.
Thank you. Another question came in is, do you self-manage your 500 units or do you have a property manager in place?
We have established over 6 years ago, we have established a property management company. We hire property managers that work for our company.
Thank you.
You're so welcome. Our growth strategy, expanding our portfolio. We believe 2024 was a kind of a sluggish year for investors, and that is our experience. But 2025 seems to be up on the uptrend. We are targeting growth markets. We identify markets with strong fundamentals, including population growth, job creation, favorable landlord laws. These markets typically show sustained rental demand and positive demographic trends that support long-term appreciation. We are in for the long haul. Our investors are of the same mindset. They understand that we're in for the long haul. We are considering currently tokenization of our assets, of new assets we are purchasing currently, and of our existing assets, which is going to give extra liquidity to investors that are looking for that. That is kind of a 21st century, the newest trend. A lot of investors have never even heard about tokenization. Maybe Reneika and I are going to discuss one session we can do for all of you on tokenization of commercial multifamily assets. Our partner opportunities. By partnering with us, you gain access to thoroughly vetted deals that meet our strict acquisition criteria. We are seeking additional partners who share our vision for creating value through strategic improvements and operational excellence. Speaking of operational excellence, I would like to say just one very important thing. We are quite frugal and quite creative. And I believe that has helped us in our success. Being creative, thinking out of the box is our motto. Think out of the box. Don't think like everyone else. Scaling approaches. Our scaling strategy focuses on efficient capital deployment across multifamily, office, and redevelopment projects with strong value add potential. This diversified approach helps maximize returns while managing risk.
Okay, Rayna, a couple questions came in. I know you mentioned the whole strategy. Question is, how long do you expect an investor expect to be in the investment? Is it 3 years, 5 years, 7 years?
Our typical investor is 3 to 5 years. We have certain investors that stay for 7 or more years, 7 so far. But currently, as I just mentioned, we are studying and connected with a $200 million firm that tokenizes commercial assets. And we're going to be presenting that to our investors for additional cash value. You can sell the portion of your investment, you can tokenize it after you've been into the investment for 6 months. And so that is something revolutionary in real estate. A secondary market's being created for tokenization of assets currently, and it is a very, very new concept, but it's coming just like crypto. Just like crypto came in 2012 and it's not going anywhere, tokenization is not going to go anywhere. It's just going to become bigger and bigger in the billions, hundreds of billions of dollars.
Yes, and for those who don't know, in terms of real estate tokenization, It just simply means representing ownership in real estate assets using digital assets, whether it's through, stable coins, but just essentially incorporating digital assets, cryptocurrency on the blockchain. And it just allows fractional ownership into a real estate property.
Thank you so much, Reneika. That was a brilliant explanation.
Oh, you're certainly welcome. The other question that came in was, how is your deal structured? Is it LPGP type deal? How are you typically structuring your deals?
The majority of our deals are structured as LPGP, but we have certain deals that we structure as joint ventures, as JV. It's kind of case by case. We're not stuck into one box. We can maneuver between the boxes and not stay in the box, being outside of the box. Joint ventures are tremendous structures that are very conducive for up to 5 investors. We need to use limited number of investors for those transactions, for those deals, but they are very, very, very successful joint ventures. We love joint ventures if we can do up to 5 investors. We believe in very personal relationships with our investors. We believe if you have hundreds of investors in one asset, you have a difficult time establishing this deep relationship with each and every one. So that's kind of our philosophy in connecting and developing and choosing who is the right. Just like investors are choosing us, we are choosing investors as well. It's a two-way street. We all learn from each other.
Thank you, Rayna.
Thank you so much. Any other questions right now?
No, not right now.
Okay. In our investment strategies, creating value and generating returns. As I mentioned, syndication model, partnering with investors to acquire properties with combined resources. Our multifamily focus, targeting properties in growing markets with value add potential. I know everyone in our industry speaks about value add, but there's so many different levels of value add. And there's so much really science behind the real value add model. So I believe we have mastered that model because throughout California, Southern and Northern California, we did over 300 fix and flips. So this is a true value add model. And we had some buy and holds as well. And then in about 2010, we started buying multifamily in Southern California. If somebody is from my home country, because California and New York are different countries, I believe. That's why I call it my home country. We started purchasing multifamily, smaller multifamilies, 8 and 12 units. We purchased at first in Pasadena, California, and they were true value add. They were kind of neglected and some vacancies, and that's a true value add model, not just raising rents. Today, a lot in our industry is being talked about, you raise rents, but there is a limit where you can raise rents. So that's not a true value add model. It has to have all the components to be a true value add. Equity growth, real estate is commercial real estate, multifamily is the, I believe it is the safest investment and building wealth to property appreciation and strategic improvements. Value enhancement, renovating and improving to increase rental income and property value. That's our investment strategy. centers on acquiring underperforming properties, our strategy in strong markets where we can implement value-add improvements. This approach allows us to increase rental income while simultaneously building equity through appreciation. And in other words, it's called forced appreciation. Through our syndication model, we pool resources with investors to acquire properties that would be difficult to purchase individually. It's economy of scale. One of us has powers and strength and resources. Several of us has a lot more power, a lot more strength, a lot more knowledge, and a lot more resources. Creating opportunities for passive income and wealth building through real estate.
Okay, a couple questions came in. One question is there a minimum amount to invest?
Yeah, our typical minimum amounts are 50,000 to 100,000. And that's a very affordable level for people to start, and then they can increase as we go along. It's 50,000 to 100,000. It depends. If it's a large project, we usually do a minimum of 100,000, but typical is 50,000.
Okay, is this for accredited or non-accredited investors?
We usually work with accredited, but we have certain offerings that are accredited and sophisticated. So it could be accredited and non-accredited in the same offering, but our main acquisitions have been with accredited investors, but we are opening it now for non-accredited and sophisticated.
Okay, thank you. Next question is, I know you mentioned the Southeast. The question is, what specific areas within the Southeast are you currently or actively invested?
Tennessee. Tennessee is our major state. We are currently looking in Texas. After the Texas boom, we pulled out of Texas. We were invested in Dallas and suburbs of Dallas, Texas. We are in Tennessee currently, looking to acquire in Texas, Alabama, Georgia, Savannah, Georgia, and northern Mississippi. Those are our target areas right now.
Thank you. That's the questions.
All righty. Our proven performance, successful projects and returns, our track record demonstrates consistent, strong performance across various property types and markets. We have acquired and improved 750 units since 2020, demonstrating our ability to scale and enhance property value. Above market returns, we have targeted 98% of our deals are above market returns, consistently achieved through strong improvements and risk management, strategic improvements and risk management. Each project undergoes comprehensive analysis before acquisition, followed by strategic improvements for increase both income and property value. We visit each and every asset we consider acquiring. We make a physical visit. We are not just looking at data. Data is wonderful, don't get me wrong. We love data. We love spreadsheets. We absolutely work on that. However, there is nothing like the physical inspection. We go first, and then if we decide to purchase the asset, of course, a professional inspection is done. But the physical inspection to us is extremely, extremely important. This disciplined approach has allowed us to consistently achieve above market returns while maintaining a focus on risk management.
Okay, sorry,
yes.
go ahead. A couple questions just popped in the chat. One is what has been your best return over 5 years?
My best return over 5 years was 36.2%.
Okay. Next question is, can you talk about some of the risk associated with apartment investing or some challenges you've experienced?
Oh, absolutely. Oh, absolutely. Um, I believe the biggest risk in purchasing an apartment building is that you truly don't understand the culture, because you're buying a business. When you're buying an apartment building of 100, 200, 500 units, uh, you are buying a business. And as much as due diligence you can do, and you have the knowledge and the expertise and the people skills to do that due diligence, when you literally sink your teeth into the operation, then and only then you truly understand the issues. The issues could be the culture, the um, certain residents that are creating a negativity. It could be so many reasons, so many challenges I have experienced with that. The financials are presented in certain way and they look okay. But when the asset is purchased, some financials don't add up and you look very lost until you find out where is this money going, and why is it uh, absolutely sucking our bloodline. So finding those things and having the right mind in digging, I call it digging. Um, um, I have an MBA, but my late honey used to say, management by wandering around. MBA. He says he didn't have MBA. So he says, I do every day in our business management by wandering around. You go and you look. It's not micromanaging. It is, I don't consider that micromanaging. I think that's a very successful way of finding anything that you can adjust, that you can fix. One thing Donald Trump says, if you can find one thing that is not working, you are doing great. And I believe in that. I absolutely believe in it.
Thank you. That's the questions.
You're welcome. You're welcome. Here's the investment opportunities for IRA investors or any other investors. Minimum investment and options. We structure our opportunities with flexibility, allowing investors to choose from equity and debt positions. Um, Minimum investment typically, as I mentioned a few minutes ago, starts at 50,000, making our opportunities accessible to serious investors seeking meaningful returns. The IRA tax benefits, I'm not going to talk about because Reneika is the expert, even though it's all on my presentation. Risk mitigation, we just started talking about this. Every opportunity undergoes rigorous evaluation to ensure our investors are well positioned in safe, high performing assets. And our transparency, I believe we pride ourselves with extreme transparency. We believe in opening our books, opening our hearts, and saying it the way it is. Um, we implement multiple risk management strategies, including conservative underwriting. I think that is one of the major keys, and diversification across markets. That's also another key that is very crucial to mitigating risk. Security and stability. Real estate provides a tangible, secure investment that is less vulnerable than stock market fluctuations. Physical assets offer protection against inflation and economic volatility while delivering consistent returns. Any other questions?
Yes, a couple questions came up. It says, can you please highlight the advantages of choosing either equity or debt investments?
Absolutely. That investment is, you have a fixed return. You're giving us $500,000 for 12 months, and the return is 10%. That is your fixed return. You're not receiving equity. For equity investment, you're receiving, plus giving us 500,000, you're receiving equity appreciation. In debt investment, there is no equity appreciation. It's a low risk, no equity. It's lower risk. I shouldn't say it's low risk, but debt investment, debt positions are typical for investors that want something guaranteed, and they are not looking at equity appreciation, which could bring you additional very, very high return. So that
Okay,
is the major difference. What's the next question?
next question is, what is your current offering? I know you'll provide your contact information so they can reach out to you, but someone's asking about current offerings.
Current offerings. You can reach out to us. I don't know. Am I allowed to discuss current offerings, Reneika?
Well, I know you'll provide your contact information so they can certainly reach out. But if you have, like, if you're active, if you do have active offerings, you'll be able to discuss that with them one-on-one.
Absolutely, we do. We do have active offerings. We do have in Texas 116 units. We're building ground up in Virginia Beach, 110 units plus retail on a canal right on the water. So we do have current offerings for sure.
Okay, next question is, do investors get a return as a lump sum after 3 or 5 years? How do investors get paid out? Is it like how is the distributions? Is it monthly, is it quarterly, or is it lump sum at the end of the actual investment?
Typical distributions on a stabilized asset, and a stabilized asset means 90% plus occupancy, which many of our acquisitions are not at 90%. That's how we acquire them, at below market values. But if the asset is 90% plus occupied, and we do not have a large improvement budget, large renovation budget, we do not we have small, and we can start distributions in 6 months, and we can do quarterly distributions. That's for a certain type of asset. If we have a certain asset that is 70% occupied, we would not start distributions until we reach the 90% plus occupancy. Then we will start distributions on a quarterly basis. And you can receive those through ACH, through old-fashioned checks, however you prefer. We have the ability to do ACH, or you can receive the old-fashioned grandfather's checks.
Yes, and if you're using IRA funds, then it'll flow back into your IRA. It'll be sent to your Advanta account. Another question is, how often do you communicate or send updates to your investors?
Monthly updates, and our door is always open. I know that's a cliche, open door policy and all that, but for us, it's not a cliche. You send us an email or you give us a call, we would return your call in 24 hours. Very rarely I cannot even remember in the last 10 years that we have not done that. We would return your call. we would address your concern, and you would know that about us, that we really pride ourselves with our responsiveness. And that, unfortunately, in 2025 is not a typical business practice. All of us do business every single day, regardless whether you are retired or you're not. You do business every day with companies. And we experience this. It's a very painful process when you call people and they don't call you back. And what I love about Advanta is that they are the same. They are the same. They're very responsive company. And I absolutely think that is amazing.
Yes, that's one of the things that we're known in the industry for in terms of that high quality service, but also our response time. A question just came into the chat. It says, so do I need to open an account with Advanta? I currently have a custodian. If you have a self-directed IRA account elsewhere, yes, you can certainly use that existing account. Obviously, we would love to have you as an Advanta IRA client, but if you already have a self-directed account that allows you to invest in alternative assets, you can certainly use that account. If you have an IRA at a brokerage firm that's only invested in stock, bonds, mutual funds, publicly traded assets, then you would have to come over to a company like Advanta to hold that real estate asset. That's all the questions, Rayna. I know we're, 12 minutes in, top of the hour.
Yes, yes, yes. We're going to rush a little bit. Why IRA investors choose Love Apartments: security of tangible assets. Physical properties provide stability. Simple, common sense, stable cash flow, consistent rental income for reliable returns. No matter of the state of the economy, everyone needs a roof over their head. And that's why we love apartment buildings. Stable cash flow, portfolio diversification, reducing overall investment risk. Diversifying is reducing risk. Tax advantage growth, compound returns with offered or with deferred or eliminated taxes, excuse me. And Love Apartments IRA investors a unique opportunity to diversify retirement accounts beyond traditional securities. Our properties provide tangible security during economic uncertainty while preparing consistent cash flow from rental income, while generating consistent cash flow. And the tax advantages of real estate, of course, and within an IRA cannot be overstated. By deferring traditional IRA or eliminating Roth IRA taxes with both rental income and appreciation, your investment compounds significantly faster than equivalent taxable investments. If we put it back to back, it's going to be always the long growth is going to supersede any other investment. Your initial investment, capital deployed through self-directed IRA, tax advantage growth, property appreciation, retirement security. All of us are going to retire one year or another, one day or another. I say I would never retire, but eventually in 30, 40, 50 years, I might decide to retire. So I always say this, retire as a word in the Bible is used when you go to sleep and you wake up the next day and you keep going. I don't know where this retirement, stop working, stop thinking, stop reading, stop communicating came from in our Western world, but the Bible is a Middle Eastern book, and thousands of years ago, retire is a word used to go to sleep and wake up. So anyway, diversify your retirement, reduce market volatility exposure. Real estate investments typically have lower conversion correlation with stock market, movements, providing stability during market downturns and reducing overall portfolio volatility. Generate predictable income. Unlike dividend stocks that may cut payments during difficult times, well-positioned rental properties tend to maintain income streams even during economic challenges. Protect against inflation. All of us know inflation is high, and it's only going to get higher. Real estate has historically served as an excellent inflation hedge, as both property values and rental rates typically increase with inflation, preserving your purchasing power. Any questions?
I think we covered most of the questions, as we went. If you have any remaining questions, feel free to put those in the question box. I think we just had a comment came in, says, I always say that the word retirement is not in the Bible. So that's just a comment piggybacking on what you said earlier. One other question just popped in is, does your investing personality change based on market condition? Do you, obviously, when the market's up, when the market's down, like how do you adjust to?
That is a very excellent question that I love to answer like this. I am a Messianic Jew, and I have learned the simple principle: buy low, sell high. No, my investment personality does not change in good or not so good times. My investment personality stays very, very even kill, buy low, sell high, and you would always succeed 99% of the time. No one is successful 100% of the time. Trump was not successful 100% of the time. So buy low, sell high, look for the best deals, look for the best opportunities that you can make, that you can make a building that is not a jam, but it is it's kind of a rock. It's just like diamonds. They are a rock before they become diamonds. Find the rocks that you can turn into diamonds. We appreciate your time today exploring how self-directed IRAs can transform your retirement through strategic real estate investments. Begin your journey. Contact us to begin your journey towards financial freedom with Love Apartments. We are absolutely very grateful for your time. We're expecting to hear from many of you, connect with many of you. This is our contact information. These are our direct cell phones. We're not just putting our company number there. These are our direct cell phones. You can reach out, you can email, you can call, and we are going to respond to you in a very timely fashion. Any other questions?
That covers the questions. Thank you so much, Rayna. If you have any remaining questions, just feel free to put those in the question box, or you're certainly welcome to reach out to us, myself or Rayna. If you want to know more about self-directed IRAs or anything, solo 401ks or ESAs, again, feel free to go to advantaira.com. Rayna, if they want to know more about your specific offerings, they can reach out to you directly. This is recorded. It's going to be uploaded onto our YouTube channel later today, but you'll also be able to get a copy of the recording and a copy of Rayna's slides. You can just reach out to me if you want a copy of her PowerPoint presentation. And with that, I'll go ahead and end today's webinar. Happy investing, everyone. I hope you have a great rest of your day. Thank you once more, Rayna. I appreciate you.
Thank you very much. God bless you all.
Thank you, likewise.
Thank you so much.